Welcome to GreenBiz Studio. I'm Nico McCrossan, Sustainable Finance and ESG Manager at GreenBiz, and today I'm excited to be speaking with Faisal Khan, Partner and North America Finance Sector Lead at ERM. Hi Faisal, thank you so much for joining us today.
Hi Nico, great to be with you today.
So, could you start off by walking me through how investors are integrating ESG risks and opportunities into the investment lifecycle to create value these days?
Sure, happy to, Nico. There's really three ways that this is happening. Firstly, we are certainly seeing an increasing focus on ESG value creation earlier in the investment cycle, meaning that, as early as pre-diligence, we are seeing an increased focus to identify ESG value creation opportunities. So this is in addition to, what the focus previously of just, red flag risks at that stage. This sort of serves as a good starting point for later in the value creation process as well. But this is the first trend we are seeing. Secondly, we are certainly seeing the development of more sophisticated ESG operating models. And again, these are the operations that are put in place to integrate at each stage of the investment lifecycle in a standardized way, which then brings some more rigor into the investment lifecycle all the way through exit. And these essentially are operating models that are designed to fit the investment thesis of a specific firm or fund and have the flexibility to accommodate, individual portfolio company specifics. Lastly, we are seeing, an increasing rigor and lessons learned from impact investing programs. So these are programs at firms and funds specifically targeting impact through the investment. And those are finding their way increasingly into some of the more traditional flagship funds. So this cross-pollination, across these two types of fund categories is sort of raising the bar on both sides. And we're certainly seeing, a lot of that lately as well.
Thank you for that clear explanation. So then on the other side of the equation, how are leading companies positioning themselves to create value from ESG-related initiatives?
Yes, so here, the main thing is that we are seeing a lot more of a granular approach, meaning that we are seeing increasing sort of disaggregation of ESG, first of all, and the honing in on very specific ESG factors that would drive the most impact for the specific business, in question. And then really, going deep with sort of building that into firstly, that increased focus, but then a performance management on those focus areas, meaning, getting specifically into the right design of some of the ESG performance metrics. So what should be measured, and then managing the quality and timeliness of ESG performance data that will inform some of the decision making based on those metrics and the data, and then tying this back to business performance. This is an area where, companies are spending a lot of time. This is, challenging in many ways, but also has, a high payback in terms of then the usability of this information. A word here on some of the emerging reporting standards. There are several in different jurisdictions across the world. So many moving parts with different requirements and that are coming into play at different times. Some here in North America are probably later than the rest of the world, but the direction of travel in any case is quite clear. So while some of these rules are evolving and changing, companies may be tempted to take sort of a wait and see approach. But we feel strongly that taking, a proactive approach, even while the rules and regulations are getting firmed up, will place companies on a better footing, not just for efficient compliance, but also managing ESG risk and optimizing opportunities sort of moving forward. So that's something that we are seeing actually. So business is moving in that direction in any case. And, and companies are doing this by preparing to transition, especially to investor grade and tech enabled sort of reporting to both help accelerate the reporting process, but, and also, to implement more effective governance and internal controls to really get to that investor grade of information for ESG information as well. and oftentimes that is aligning this more with some of the financial reporting, governance and controls, which we are seeing also, a lot of lately.
Yes, absolutely. We're seeing a huge demand for more granular data, both from the companies and from the investors. And so now you've explained the value proposition of ESG for investors and for companies, and highlighted what a massive challenge it is for these companies to implement ESG strategies. So my last question is, how does ERM work with clients to develop and implement ESG strategies that create long-term value?
Yeah, no, happy to go into that, Nico. Firstly, just a word on ERM ourselves. We are a pure play sustainability consultancy. We've been in the business now for already 52 years. And so, what we bring is really, technical depth in everything E and S in particular, and several aspects of G. But then we combine that with, deep sectoral capabilities, and the ability to really operationalize sustainability. So we work on a strategy through execution basis with the ability to, do sort of technical work or technically led work where needed. In an investment sort of environment, we work with investor firms from everything from the strategy, at the firm level, developing, governance, operating models, like I mentioned, and then the reporting, the public reporting as well. At the fund level, we are working extensively with fund strategy, also the integration of ESG across the investment lifecycle at the fund level, especially with some of the more the more regulated funds, regulation, from an ESG standpoint. And then we do a lot of the investor, relations advisory around some of the public reporting of that. And lastly, we are working with companies. So this is at the portfolio company level, everything from, onboarding those companies into a fund, into an ESG strategy at the firm level, and then working that through on an individual ES and G metrics basis to manage, to target and manage performance, so that at the time of exit or through the whole period, there is a significant value creation. So that's the ways that we play in this space. And again, it's a combination of technical capability, especially on the E&S side, combined with sector and transformation capabilities, and how we help our clients create value at the firm level, at the fund level, and at the portfolio level.
Wow, it sounds like you've got a lot of exciting work going on at ERM. I've been talking to Faisal Khan, partner in North America and North America finance sector lead at ERM. Thank you for speaking with me today.
Thanks. Great to be with you, Nico.